What's good, guys? Google got some insane flow today. If you guys want to follow along with this article, you can just go read it for free on our blog, thtcommunity.com. And you guys are going to see here that we had some really unusual flow come through. So we had double AlphaGold flow on Google. So AlphaGold flow is an alert that only happens after the market opens and is triggered when a large accumulation of specific options contracts, in particular with a single trading day. So we need to see a ton of volume on one specific contract within one trading day. A minimum dollar value threshold must be met, which I think is like $1 million per contract. While the majority of the alerts are used for intraday trades, these are going to be more swings most of the time. So this is all pulled from Black Box, handpicked from us, and you can see that these are the two flows that came through. Now, one of the things that I really wanted to share with you guys in this video that we don't go over a lot is actually looking at the contracts and looking at volume. So I'm going to show you guys on Black Box, but I actually put the screenshot here. For those of you who do not know what open interest is or volume on the blog, here are the hyperlinks to go read about them. But basically, volume is going to be the amount of contracts traded within a single day, and open interest is going to be the amount of contracts currently being held. So if we go in here and we go to our alerts, we're just going to go type in GOOG, and we're going to see that on Google, we ended up having a solid flow come through. Now, this is the unusual options flow that came through, but if we actually isolate this, we're going to be able to get that chart view that we saw earlier. So the calls were Google, $140 for May 17th, 2024. So we have time, we did have size on the contracts, and we did have urgency on the contracts, which is good. Now, something to note is going to be this gold line. This is going to be the premium value, or basically the price of the contract. So you can see back here in February, these were $16, meaning one contract is going to cost you $1,600. Right now, the same contract is only going to cost us $600. So obviously the price of the contracts I'm sorry, not 600. It's going to cost us 600. I'm sorry, 600. So basically the price of these contracts have cratered. But if we look at open interest, this green vertical bar, and we look at volume, you're going to notice that as we are coming down, they are buying the shit out of these contracts. And today specifically, look at how much volume there was, right? Open interest was 18,000. Today we had 16,999 volume. So this is a very strong divergence. And I'm telling you, this is a very unusual sign. It does not mean that this is definitely going to bounce and that we're going to see a massive push up on Google. But this is something, in my opinion, worth putting money into for me, or at the very least, looking at this position further, maybe moving over to our charts and looking at it from a technical standpoint. So let's do that. If we look at this, you're going to see that we're using TradingView. The only indicator I have right up is Smart Money Concepts by Lux Algo. And you're going to see here that we have a very strong bullish order block. And if you guys know anything about trading order blocks, the middle of the block is called our EQ, or our equilibrium. And look at where we bounced, right on equilibrium. So I think that there is a very high chance that we see this bounce significantly. Now, where to? Okay, in most cases, you would probably expect that we would come all the way back up to test this order block, which is about a 10% move. Well, if we pull this down and we go from swing highs to swing low with a Fibonacci retracement level, you're going to see that our 0.618 Fibonacci is going to line up right around 145, and our 707 is going to line up at 148. So I think there's a very high chance that Google bounces back up to $146 within the next couple of weeks. Now, how do we place a stop loss here? So if we enter at 135.20, we can pull our take profit all the way up at 147.38 and then set a stop loss on complete break, which gives us about a 2.43 RVR. Now, the best entry, not confirmation, but from an actual risk standpoint, would have been down in the middle of that order block. I can't be like, oh, I perfectly would have entered here, but it would have been entering right in the middle of that order block at equilibrium, setting a stop loss at a lower low. That would give us a 5-to-1 risk versus reward. So I hope this helps. If you guys want to trade like this every single day with me, go check out our Discord community and get access to all of our trades, all of our trading bots, all of my personal trades as well. And you can do all of that at thtcommunity.com, or check out the second link in the description to go join through Upgrade Chat. Thanks for all the support, guys. I'll see you next time. Peace.